Hello and welcome to January 18th. We have a 232% winner in 7 days. Who was it? Let's go find out. All right. So, right here is the account. There's our positions, and one of these is the lucky winner who got out at 232. So, have a little contest here. Those who have been paying attention to the market, and then those who might just by good feeling. Pick your one, and got your one. You've got your selection. Here we go. 5, 4, 3, 2, 1. The winner is SLB. And here it is. There it is. It's SLB at, well, we got into this trade at 122 and we got out at 406. So let's call up our trusty calculator, and we have 406 gross return minus the 122 for the cost. 284 was the net profit. Divide that by the 122 as a percentage, and the number is 232.8. Yeah, 232.8 or 0.76888524. 232.8. All right. So what did that equate to in cash? Well, let's go look at the chart, because that's where I have my data, and you can take a look and see. And there's the chart. And we got out here this morning. Now look what happened here. This was so cool. You set your target and it hit. Now, who's to say that it's not going to continue running up? Not me, not you, not the market. Big money? Yeah, they might. They have an inclination that they might, be selling off to take a little profit off the top and then get back into the game again when it keep moving higher. So the bottom line, though, is we have set our rules. We got in here on, and let's go ahead and bring up the data box. We got in on here. We set this trade up on the 4th. We got triggered on the 5th. And it was a little bit costly, a little slippage. And then we just ran. And how this trade was determined was volume. I run the scanner, and then the one with the highest volume got in. Now this volume that day, let's go over the statistics here. This is known as the CTS trade, which is CTS. Okay, guys, what is CST? CST. Candlesticks. That's all, guys. It's just candlesticks. Every school has a little clerk, and it's just the same thing. This was here was a breakout candle. That's what that was. So a breakout candle, and I saw that breakout, and I saw this momentum here, and it had good volume there. And the result says, you know what? This has potential of running higher, and set it up. And remember, we're 3 to 1. So it's $1 risk for a $3 return. And then also, too, I have what they call the EPS, and this comes from Market Wizards Traders. It's nothing new. It's not a hidden secret. It might be a hidden gem that's not popular out there among some people, but the Market Trader and the Market Wizard books from Jack Swagger is that once price has cleared the entry point, a lot of traders will put their stop at the entry point. Why? Because they don't want to take any, if it reverses and it doesn't go their way. Sure, it might come down and retest this entry point and can bounce up. I've seen it happen. Come down here, going through here, and then boom, out it goes. And a lot of market wizards say, you know what? I'm good with that. Why? If it breaks below this entry point down in here, hovers along, and then crosses this entry point again to the upside, then what do we have? We have a small W. Up, down, out. Yeah, W's and M's. We've seen it all the time in trade schools, and there's nothing new about them. And then if we go into a 1 hourly or a 15 or a 30-minute or a 15-minute chart, we'll find it buried in here. I don't do that. I just go with the flow. I trade what I see. Mark Hawknocker from Rockwell Trading in Dallas, Texas. I believe it's in Dallas. And there we are. So moving on. So we had our run. We got up, and then we spiked into our take profit rule. And there was, we take the profit and we got out. So going back to the data, We did have 3 contracts. It was expiration January, which this is the expiration line. So it was good. Just take it. Don't go, you say, oh, well, there's more run. Well, just buy in and get a longer, get the next expiration date. Don't go jumping in here with only 3 days of possibilities. And then, of course, you're going to use your 3 to 1 based off this entry. This is gone. So it'd be a new entry up in here somewhere. Going on, we were expecting to pay $1.13 for the trade. We got in at 122, so it was some slippage. Our anticipation was that this is a lost leader trade, which means it owes me 47.49. And the other data that was anticipated, I was expecting to pay 339, but I ended up paying 366. And then we used last bar low. Remember, when you get into a trade, have your exit strategy. Know your exits. Like market wizards, they know when they get into a trade, if they get it, this is their exit down here, their first exit. Once price is clear, what I call the gantry, like SpaceX taking off from the pad. Once it clears the gantry, then they move the stop up here to the EPS entry price. Another market wizards, they do the 3 to 1 ratio. Once price breaks past the first ratio, they'll go to the first ratio. In case of reverse and come back and says, oh, but it comes back and bounces back out again. They don't care. They're out to protect capital, risk management. That's their control of risk management. Going down here, so we had my rule is that once we pass 100 ROI, which also I've discovered a lot of market wizards in the same mindset, they take the profit at 100 ROI. They don't wait for last bar low, which is what I do. I wait for the bottom of this candle once I get past ROI 100. But if it hits that 3 to 1, I'm out, gone, take it away. And you can see the results down here at 232%, 0.8, 14 days, 282, 284 per contract, 3 contracts with a minus of $4 in fees, came out with a win of 848 against an ode of 47.49, and now I have a new O of 39.01. Now, this account is a $5,000 account, more or less. Therefore, I'm limited to 3 contracts. But let's do a little gameplay as we close up here. 284. So let's say that you have 284 and someone happens to have a $25,000 account and they're able to get 5 times. So they get 15 contracts and they get out with $4,000 in 2 weeks. So imagine those of you who have larger accounts and can say, okay, my risk management is still within check because you had a $25,000 plus account. The result is you have opportunity of picking up what I call big game hunting. Anything close to $1,000 and over to me is big game hunting, and that's where I come from. Okay, with that said, we're going to conclude today's report with who was the day's winner of 232. You saw it. If you pass it, see it again, and get it down. Oh, I'll get rid of this, make it a nice, pretty closing. And there we are. All right. With that said, I thank you very much. Those who have not subscribed, subscribe. Those who haven't given any comments, let me know what you think. And with that said, I thank you very much for stopping by, checking it out, and catch you later.